Welcome back. You're watching Market Fatafat on ET now. 30 minutes done, another 30 minutes to go. And let's bring on board Nagaraj Shetti to join us on the show. Very good afternoon to you, Nagaraj. And the first talk that you're going to talk about is IDFC First Bank. How is it looking on the charts right now? Because looks like the stock has not managed to perform as well as the technical analysts were expecting, or the charts at that point in time was expected for IDFC First.
Hi, good afternoon. Look at the IDFC First has been in a downtrend over the last few months, and last 2 weeks transaction is very interesting. It has shown an upside momentum from the lower levels of around 75. Having moved up sharply in the last 2 sessions, the stock price is currently showing consolidation at the strong hurdle of around 84 levels. 84.50 is going to be a strong hurdle. Once it is above that level, then we are likely to see the next overhead resistance of this stock around 94-95 levels. So looking positive for me.
Okay, let's move on and talk about the next stock that's in focus. We have Talbros Automotive Components that's in focus, and today they've signed a joint venture. JV actually has signed and secured a multi-year contract which is valued at around 1,000 crores from a European OEM. Now the order is expected to be executed over a period of next 8 years, commencing the fourth quarter of this fiscal year. This is what the company has highlighted. On the back of that, today we're seeing Talbros Automotive that is locked in upper circuit, and we did have management as well. They did say that they are also quite positive in terms of what they are expecting in terms of the outlook for the company going forward, in terms of the overall where they expect the EV business to start seeing better growth. And let's go across and actually listen in to what the director and group CFO Naveen Juneja had to say about the outlook.
We are expecting a growth of 18-20% in our businesses altogether, and some businesses will be more than 20%, some will be 18%, some will be 15%. So average 18% growth we are looking at the business. Of course, the more orders from the European countries we are getting in EV, because they are trying to launch the vehicles in FY25 and 26. And from domestic front also we are getting not very big orders, but small orders. Target is our total top line of 2,000 crore, 12% will be EV business, more than 12% will be EV business. Target 27 on FI.
All right, let's shift focus, and in similar space, let's talk about RK Forging or Ramakrishna Forging. That particular counter saw a good up move at open. It's on uptick as much as about 3.5% or so, and now the stock is holding on to gains of 0.3%. It in fact went to a day's high of about 764.8 rupees per share. The company said that they are engaged in making forged components for automotive, railways and farm equipment. They said that it secured approvals to supply powertrain components to the largest electric vehicle producer in the United States. However, the company did not name the mention of the electric passenger vehicle producer in its release. So on back of the fact that it has got that sort of an order from a US EV maker, the stock is seeing good gains. It's for a third consecutive session, now holding on to gains of about 1.3%.
Absolutely. Let's move on and talk about some of these real estate names, Brigade as well as Suntech Realty. Both these buzzing away in trade.
Well, absolutely, Vinny. Two stocks of the real estate pack are in focus on the back of their quarter 4 operational updates. Let's start by looking at Brigade, because that stock is doing pretty well, up more than 3.5% as we speak. Now for Brigade, the company has locked in pre-sales of 2,243 crore rupees in quarter 4 and 6,030 crore rupees in FY24, both being the highest ever figures quarter as well as full fiscal. The average realization for FY24 has 23% on a year-on-year basis. Collections across the group have also come to 5,915 crores, up from 5,424 crores a year ago. Leasing portfolio is up 14%, and that's across their main portfolio. But when you look at hospitality, the average room rate is also up 8% on a year-on-year basis. So while that's on Brigade, let's and talk about Suntech. That stock also up 2.5%. Suntech has recorded a 26% year-on-year growth in sales, and for the financial year 23-24, the company's pre-sales have been up by 20% to 1,915 crore. Collections for the quarter have also grown to 296 crore rupees, and the company has said all of these numbers on exchange. So well, good numbers coming in across the board for both of these companies, and both stocks are also doing pretty well right now.
The next stock number 17, LTI Mindtree. Ankita, this one is in focus on the back of a brokerage note, I believe.
Correct. LTI Mindtree is in focus on the back of a brokerage note that's come out now. Macquarie is maintaining a perform in this particular counter, but they've cut the target price to 6,250 rupees from 7,050 rupees per share. Now they feel that the merger synergies have hit an unexpected rough patch. The top clients have performed well. The client mining has faltered beyond that. They also feel that the cross-selling synergies would now come only after a demand recovery, and they're retaining an perform as LTIMindtree remains structurally a rather sound company, and on the back we can see an uptick of 1% coming in on LTIMindtree.
All right, so that is LTIMindtree, that is focus. Nagaraj, let's talk about Bajaj Finance then, and how is this one looking? The charts are a big, huge rather a heavy. What's your take coming in on this one?
Currently, finance has reacted down from the higher levels, from the lower high, in fact 7,260 levels. I'm not expecting any bigger upside from here. I'm expecting some softness to continue for the stock price in the near term. And at lower levels, I think 6,550, 6,600 is going to be the support for the stocks over it in the next few weeks. Overall chart pattern is looking weak. I'm expecting weakness.
Okay, that is Bajaj Finance for you all. Let's move on to the next one. And Ankita, Maruti is in focus. Why is that so? What's happening in Maruti?
Well, yes, a note by Bernstein. What's happening in Maruti? They're maintaining an outperformance. They've hiked the target price, 14,400 rupees from 11,500 rupees per share. They feel that Maruti has Hyundai has outpaced Maruti earnings front in the past few years due to the premium and the SUV position. I also feel that Maruti is also catching on, but the narrative in the passenger vehicle segment that has now shifted to from SUVs to EV. Here, the Maruti is absolutely well positioned, and it is likely to tap this opportunity very well. They also feel that Maruti is likely to benefit from the potential push towards hybrid in the medium term. On the back of that, they're maintaining an outperform in this counter, and right now, Maruti is trading rather flat with the gains. It's whipsawing through the day, but right now, absolutely flat in trade.
All right, so that is Maruti Suzuki for you. But Nagaraj, let's talk about AB Capital. I know this is the darling when it comes to a lot of technical analysts. No doubt, year after year, I have seen some rotation in stock picks for a lot of technical analysts. But this stock always remains as one of the top picks. I've always wanted to know why, given the fact that if you look at the last 6 months, it's just given returns of about 12%. But a lot of people are pretty upbeat on the prospects coming in fundamentally for capital. What about the technical front now this time around?
Yeah, right. Overall chart pattern is looking positive. Even if the long-term charts are looking so strong that recently it has witnessed a decisive upside breakout of around 190 levels, currently placed at the higher levels. Though moved up sharply recently, the stocks are currently showing consolidation movement. Overall chart pattern is looking positive. I'm expecting this upside momentum to continue for the next at least a couple of weeks, and 225 is going to be the next overhead resistance for the stocks in the near term.
That is Nagaraj's view coming in on AB Capital. Let's talk about JSW Energy, and that particular counter saw an uptick of as much as 2.5%. Last time I checked, surpassed those levels 3.5%, except 3.5% is where
that's a different story, right? Where we have seen stocks falling today. This
exactly.
one picked up pace.
Nothing like what Angel one actually had to throw up on screen for me. But yes, JSW Energy good gains about 3.6%. It is actually set for the best day about 2 weeks or so. The news flow that came in yesterday was the fact the arbitral tribunal has ruled in favor of the company's unit claims for about 120 crore rupees, which is a dispute with Tamil Nadu Generation and Distribution Corporation, that is known as Tangent Co. And also Tangent Co. had also put in reverse claim order, which actually the tribunal actually went ahead and rejected. So on back of that particular positive news, the stock is trading higher by about 3.6% as we speak.
Okay, let's move on and talk about a cement counter that is in focus, and we'll talk about Ambuja Cement. Now, why is Ambuja Cement in focus, and what is happening is that Adani family have additionally infused 8,309 crores in Ambuja, and now its stake has risen to around 70.3%. When you look at it, what is happening is that will overall take the promoters' total infusion, that is of Adani family, to 1,000 crores in Ambuja Cement, and the cement and the building material company of the ports and to power conglomerate is something that they're keeping an eye on. Overall, now we're seeing that a considerable increase that has come into the stake of the company. Other than that, the family had also invested, like we said, over 5,000 crores in 2022, 6,660 crores approximately in 2024, and now this further more increase that is coming in. They've said that infusion is mainly going to be important for achieving overall the capacity of 140 million tons per annum by 2028, which the company is focusing on, keeping an eye out on Ambuja Cements, holding on to gains of 4% in trade.
All right. Actually, we also have HDFC Life that has come up with numbers. We'll get in the details for HDFC Life in a short while from now. If you look at the pack, it's coming at around 412 odd crore rupees. We will just get connected with our researcher to exactly understand how the numbers have transpired for HDFC Life. The PAT is coming at around 412 crore rupees as against 359 crore rupees a year ago. If you look at the premium income, is coming at around 20,488 crore rupees against 19,427 crore rupees a year ago. We will try and get some more details. Another very crucial development that is coming in the HDFC Life announcement is the fact that Deepak Parekh has actually stepped down as the chairman and non-executive director. So that is another headline coming in from HDFC Life. But we will connect with our researcher and get some more details for you on that particular. For now, Nagaraj, MapMy India, how is this looking on the charts?
Yeah, MapMy India, after a consolidation moment, has witnessed a upside breakout in this week and placed at the higher levels. Overall, pattern is indicating a formation of higher bottom around 1780, 1790 levels, and there is a possibility of some more upside in the near term. 2040 will be the next resistance. What I'm expecting this stock to reach out in the next 1 month.
Keeping an eye out on MapMy India. But on that note, let's just slip into a very short break while we break down the numbers of HDFC Life after the break. As of now, let's go across to the break.
All right. Welcome back. You're watching Market Fatafat on ET now. And if you look at HDFC Life, recovering from the day's lowest point on back of its numbers. If you look at uptick of 5% on net premium income, PAT has seen an uptick of about 50%. The stock is recovering in trade today. But let's talk about Anthony. And that one also seeing a good upbeat move in today's trading session. Last time I checked, the stock was trading higher by about 3% or so. Now giving up all of the gains, barely in the positive territory. The company said that they've handled about 1.14 million tons of waste in Q4, which is higher by about 9% on a year-on-year basis. And considering that that's the primary function of the company, and on back of that upbeat quarterly performance, operational performance, the stock did see a spike, as you can see that on the screen. But then from there on, gave up all of its gains, Vinny.
Absolutely, that's Anthony news for y'all. Let's go on talk about TARC then. And Snehi, why is this one in focus? What's the news flow that we have around here?
Well, Vinny, TARC is in focus because it has reported a 1,612 crore pre-sales in FY20, FY24, which is a 200% growth from the previous year as demand for luxury real estate continues and remains intact. The company also achieved its highest annual collection to date, reaching 415 crore rupees. The fourth quarter of FY24 witnessed exceptional sales, with TARC recording sales amounting to 1,281 crores in quarter 4 itself. Now, this staggering growth of over 600% on a year-on-year basis can be attributed largely to the success of the recently launched projects of TARC, which is TARC Kailasa, and the other ones are located in New Delhi. So, on the back of these stellar sales numbers and pre-sales collections numbers, the stock is locked in upper circuit as we speak, up 5%.
All right, let's talk about IIFL Finance then, Ankita. And why is this one in the spotlight today?
Well, yes, IIFL Finance is in focus today on the back of a fundraise. They're likely to raise some 1,272 crore rupees, and this is going to be via rights issue. Now, the issue is likely to be for 4.2 crore shares, 300 rupees each. Now, the rights issue is likely to open on the 30th of April, and it will be closing on the 14th of May. The date has been set for it on the 23rd of April, and the rights entitlement ratio for the investors is going to be 1 rights share for every 9 shares of IIFL Finance that you're holding, and that's the news coming in for IIFL Finance. On the back of that, the stock is in focus today.
All right, that is IIFL Finance for you. And let's talk about HPCL. Nagaraj, how is this one looking on the charts to you, given the fact that all these OMCs are moving as day after day as food prices are moving?
Yeah, after declining the previous few 2 months, the stock has been in a range-bound action, a narrow movement over the last 1 month. Currently placed at upside breakout around 490, 495 level, and overall chart pattern is looking positive. higher tops and higher bottoms. What we observe on the long-term charts is indicating more upside is likely for the stocks. I'm expecting upside breakout around 495 levels. On that front, we could see next hurdles to come around 545, 550 in the near term.
All right, let's move on then. Let's talk about capacity infra. That particular counter is in focus on back of an order win. It hit 6-year high on an intraday basis. On back of the order win, the stock actually saw an uptick as much as 4.5%. Now given up gains, 1.7% uptick coming in for capacity infra. The company itself has received an order worth about 449 crore rupees, which includes an order worth about 256 crore rupees from Macrotech developers. That is Lodha for you, erstwhile Lodha for you, and 293 crore rupees worth of order from Raymond. So on back of a total order win of around 500 odd crore rupees, 549 to be very precise, stock is seeing good gains, gaining in fact for a third consecutive session, Vinny.
Let's move on to the next stock and say, let's talk about Biocon. Why is this one in focus?
Well, Vinny, Biocon has signed an exclusive licensing and supply agreement with Biome SA, which is a specialty pharmaceutical company in Brazil, for the commercialization of its vertically integrated product semaglutide G Ozempic, which is used to improve glycemic control in adults with type 2 diabetes. Now, under the terms of the agreement, Biocon will undertake the development, manufacturing and supply of the product, while Biome will be responsible for obtaining regulatory approval and commercialization in the Brazilian market. So on the back of this exclusive licensing agreement that Biocon has gone ahead and signed with this Brazilian company, stock up 3%.
All right, move on. Let's talk about Devyani International, then Nagaraj. Actually, a note about this particular stock has been a part of the QSR space. A lot's been talked about the stock in fundamental reasons, but rarely we've seen the stock actually make on the technical list. How is it looking on the charts? You 16% drop over the last 6 months. Any scope of revival?
Yeah, of course, I'm expecting a revival from here on because we have seen a decline from the high of 220 to 18 levels from December to till 150, 145 levels. The stock seems to have its downtrend and currently placed to move an important bottom so far now, and I'm expecting a decisive upside breakout of 165, 170 levels in the near term. On that front, 190 is going to be the next upside resistance to be watched for stocks for this in the near term.
Okay, let's move on and talk about ABB India and the industrial names, all of them in focus on the back of a brokerage note.
Well, absolutely, Vinny. All of these are in focus on the back of a brokerage note by Nomura. Now, Nomura has gone ahead and it has released individual notes on all three counters. It's a rather somber coming in for ABB, and the stock is also acting in tandem with the note. For ABB India, they've downgraded the stock to a neutral rating from a buy rating, but they've gone ahead and hiked the target price to 6,660 rupees from 5,750. So despite a hike in target price, they've gone ahead and reduced the stock from a neutral to a neutral rating from a buy rating. And on the back of that stock is lower by 3%. For L&T, they've maintained their buy rating and hiked the target price to 4,230 from 4,090 rupees. And for Cummins, they've maintained their neutral rating but have gone ahead and hiked the target price 3,040 rupees from 2,510 rupees. They believe across the industry, earnings momentum will continue and robust demand and healthy pricing power will be sustained as well. For ABB specifically, they downgraded that stock to neutral. They believe that the valuations of ABB are very rich, and they've also raised their earnings estimate for Cummins as well as ABB on margin improvement and for L&T on the execution of the order book. So while this is a note coming in from Nomura across the industrial stack, rather negative for ABB but positive for L&T and Cummins India.
All right, so that is all about industrials, ABB in particular in focus. But with that, we are totally out of time on this edition of Market Fatafat. Thank you so much, Nagaraj, as well as Ashish, for joining us on the show. Along with that, Snehi, as well as Ankita, for helping our viewers decode all the moves in the stock. But on that note, as we wind down this edition of Market Fatafat, it's a goodbye for Vinny, myself, and the team that put the show together. But here, what Vodafone Ideas MD and CEO had to tell our colleague Ajay Sharma has to road ahead, given the fact the FPO opens today.
We announced our anchor investors yesterday, and you said GQG is a name you mentioned. Along with that, we have leading investors like Fidelity Management Research, UBS, RWC out of the foreign investors. These are the large ones. In the Indian investors, we have got HDFC Mutual Fund, Quant Mutual Fund, Motilal Oswal Mutual Fund, and also there are some insurance companies from India. So it's a widespread. Also, there are HNIs. So as you said, we are reaching out to all segments of the investors, and HNIs are also represented in the anchor book. A very important point of having a strong anchor book is also seen as what is the mix of the investors. And there I would say that we have less than 5% of the anchor book, which is allocated to hedge funds, which itself is a very positive sign. Now, in terms of the discussions with these investors, really everybody is convinced about the India story. Everybody is convinced about the India telecom story, because the industry today has a very right structure with 3 private players. Population is growing, penetration is below where it should be. ARPUs are somewhere lowest in the world. So telecom industry potential is there. As far as Vodafone Idea is concerned, they've seen 10 quarters of consistent performance, very limited investments, strong brand loyalty, and some of the strength areas that we have are customer focus. So we have seen an efficient performance which has delivered improving KPI and financial performance, gradual with lack of investment. And I think what we have been able to convince them is that once fund is in place and we are able to make the right investments, then the improvement would be more meaningful. And as I said, with the government support, which is important in our case, and which I believe has been reiterated both by the Honorable Minister and the Finance Secretary yesterday, I think they are very, very convinced.
Excellent. So let me take it forward with the last line which you just said, that with the proper investments. So this money which comes in, talk to us about how the proceeds of this, and will it be sufficient in achieving what kind of goals? Because I remember 3 years back there was a big rights issue as well, around the same size. Now talking about how this capital allocation will be made and what will be achieved out of that.
So one is we are looking at this 18,000 crores, which is the FPO amount. As you are aware, the promoters are also going to invest 2,075 crores by way of preferential. Just to be clear, this is not the only fundraise. We are going to raise further debt, which unfortunately we could not do after the rights issue because of the AGR judgment. But now we have had discussions with our lenders. We are going to tie up the debt post the equity being in place. So the overall funding which we are doing is going to focus only on growth capex, and generally our internal accruals are the ones which will be used for paying the bank debt. Bank debt is now at a low figure of 4,500 crores, and the vendor dues have to be cleared, some of them. And of course, we have the after moratorium, the government dues have to be paid. But the funding is largely for growth capex. And